Imagine taking a hard-earned block of ice and leaving it out in the summer sun. By the time you need it, half is gone. That is exactly what happens to traditional savings left in a bank account during high inflation. Your money just melts away. In developing nations, this evaporation happens daily. Look at the currency in Argentina. A single US $100 bill commands the exact same purchasing power as this thick stack of 1,000 peso notes. The local currency devalues so rapidly that the price of groceries can jump between breakfast and dinner. When the money in your pocket buys less every single hour, you stop holding it. Workers are forced into a daily scramble to convert their wages into something, anything that will actually hold on to the value of their labor. These citizens are left totally exposed. The domestic financial systems they are supposed to rely on provide almost no protection against a collapsing national economy. So what are the alternatives? If you try to use a traditional bank to move your money to a safer international account, you hit a wall of friction. A wire transfer can take 3 days, and the bank might carve out $30 in fees to process the paperwork. You could try a cryptocurrency like Bitcoin. It moves across borders at light speed, and no bank can stop it or tax it. But that speed comes with a massive catch. If you buy groceries on a Tuesday, your digital coin might drop 20% by Wednesday. You cannot pay your rent or accurately plan a budget with money that acts like a roller coaster. This leaves the global working class stuck between two broken options: a slow, expensive banking system that chips away at their wealth, or a chaotic crypto market that might wipe it out overnight. This is where a new piece of technology comes in. It is called a stablecoin, and it takes the lightning-fast speed of the internet and fuses it with the boring, reliable stability of everyday cash. Think of it like a digital casino chip or an Amazon gift card. When a company issues a stablecoin, they take one actual physical US dollar, lock it in a transparent vault, and hand you one digital token in exchange. As long as you hold that token, it is worth exactly $1. It does not grow into $2, and it does not shrink to 50 cents. The value is perfectly anchored to the physical cash sitting in that vault. This specific, trusted system is called a fiat collateralized stablecoin. Fiat collateralized means that every single digital coin minted is backed one-to-one by government-issued currency, like US dollars, held in a secure, audited reserve. By putting a fully backed dollar on the blockchain, you get all the benefits of cash. But because it is digital, you never have to worry about carrying paper bills or waiting for a bank to open its doors. For workers living through hyperinflation, this technology is a lifeline. Instead of watching their savings evaporate in pesos or lira, they are converting their paychecks into stablecoins the very second they get paid. This immediate swap locks their labor in at a fixed value. While the local currency blocks around them melt down to nothing, their digital dollars remain perfectly solid, freezing their exact purchasing power in time. Local businesses are catching on. To avoid holding cash that loses value by the hour, merchants are increasingly accepting digital currencies directly at the register. Stablecoins act as a personal financial firewall. Anyone with a smartphone can instantly bypass their failing local economy and tap directly into the stability of the US dollar without ever asking a bank for permission. This borderless utility also fixes one of the most expensive processes in the world: sending money home. Take Kenya, for example, where millions rely on a mobile money network called M-Pesa to manage their finances. This chart shows the harsh reality of relying on that system. You pay a premium just to access your own shrinking money. If you save 15,000 Kenyan shillings, heavy fees and inflation guarantee a -6% real rate of return. But by swapping into a stablecoin like DAI, you reverse the math, earning interest and securing a positive 1.57% return. And because it runs on a blockchain, sending digital dollars across the globe takes seconds. You can transfer funds at midnight on a Sunday, and the fee is usually just a few pennies. International remittances no longer have to be a heavily taxed luxury service. With a stablecoin, moving your wealth across the planet is as fast, cheap, and frictionless as sending a text message. Of course, whenever you mix money and the internet, you have to read the fine print. Not all digital dollars are built the same, and there is a massive difference between a fully backed fiat stablecoin and what is known as an algorithmic stablecoin. An algorithmic stablecoin is a digital currency that uses computer code to automatically manage its supply, rather than holding actual assets in a bank. It attempts to hold its $1 value by printing and burning a secondary volatile token to absorb market shocks. When market pressure gets too high, that code can fail. In 2022, a massive algorithmic project called Terra USD lost its peg to the dollar. The math broke down, panic set in, and $40 billion in value vanished in a single week. If a digital dollar is not backed one-to-one by actual fiat reserves and verified by independent audits, it is not a stable store of wealth. It is just a fragile mathematical illusion waiting to break. Fortunately, governments have noticed. New strict regulations in both the US and Europe are now legally requiring major stablecoin issuers to hold full, transparent, one-to-one reserves. This clear legal framework takes stablecoins out of the Wild West of crypto trading. They are quickly becoming a trusted foundational settlement layer for everyday global commerce, used by major financial institutions and small businesses alike. This technology brings three massive upgrades to our financial system: an unyielding, stable value, an ultimate shield against local inflation, and the ability to move money instantly without borders. The internet broke down the geographic barriers to human knowledge. Now, stablecoins are doing the exact same thing for finance, democratizing access to stable, frictionless money for anyone in the world.